Alrighty, let's talk about money. Let's talk about some of the ways to get money. Today I want to talk a little bit, Emilio, you and I were talking about this earlier, and I just kind of want to reiterate, a lot of people that I get these phone calls from just seem to assume that because they have, high 700 scores, because they have a job, it's just a wrap. It's an easy deal. Oh, I'm qualified for this mortgage. And when you're buying in this market right now, it's a fast-paced market. I think Emilio will agree with that. And you have to be pre-approved. 99% of the times, I think that people are really catching on to this concept of if you don't have a valid pre-approval, nobody wants to hear anymore, oh, I'm good. I can buy. Don't worry about that.
We won't work with buyers unless they show us a pre-approval.
And I think a lot of places are starting to do that, where the norm before was, oh, my buyer, I used to get calls from realtors all the time. This guy's good. Yeah. He's good. 700 scores, been at his job for the last 5 years. But that doesn't mean you're good. It means you have the potential to be good. It means you have the ability to be good. And the rest is on you. What have you done to not mess that up?
Yeah.
And some of the things that can eliminate someone who's good. I'll give an example of one right now. I have a buyer. He's an 800 credit score. I have a buyer. He's had his job for a long period of time. Unfortunately, what this buyer did was he took about $30,000 of undocumentable cash and he deposited it into his bank account. Guess what? You're not good anymore.
No.
You need to be able to show us where that money came from. And when I say, where'd that money come from? He says, oh, well, it was cash. I had cash. Well, where did this magical cash come from? And unless you can document it, and then people say, oh, well, my cousin gave it to me. Well, now you have to show me your cousin's bank statement, and you need to show the money coming out of your cousin's account. And if you're doing a loan that's FHA, then the cousin has to produce the last 60 days of his bank statements. If you're going conventional, they only have to produce 1 month of bank statements. But all of this needs to be documented. And what I find from a lot of clients, they think, well, I have an 800 score and I have all this money. I should just get a loan. And unfortunately, I agree with you, but it doesn't work that way anymore. So it's very important that these pre-approvals. So the process is pretty simple. And if you're working with somebody right now who isn't following this general process, you might want to question it. They should be doing a formal application with you. A formal application should be taking anywhere between 10 and 15 minutes, depending on how in-depth your situation is, how in-depth your application is. Are there multiple buyers on this? Are there multiple borrowers? Do you have a non-owner occupied co-signer? Have you had 5 different jobs in the last 2 years?
Yeah.
Do you have crazy deposits going into your account? Are you self-employed? All these things can add to the length of time that you're going to have on a mortgage application. Once they finish that mortgage application, they should be pulling a credit report. Whether they're pulling a tri-merge credit report, meaning all 3 credit agencies, or they're pulling a single report, they should be pulling something. Not because they need that number. That number doesn't mean anything. It means something, but it doesn't mean everything.
Yeah.
And if you're calling up your mortgage professional and you're saying, well, I was on Credit Karma last night and I'm an 800 credit score.
Big difference.
If your mortgage pre-approval is based on Credit Karma, you shouldn't have a mortgage pre-approval.
No.
So once they finish that application, they've accessed the credit report. What they should be doing at that point is searching for different options for you. Any given person on any given day, there's probably about 50 to 100 different options that you could pick and choose from. Those options will be determined by your application. Why are we asking how much money you have in the bank? Because we need to know what options you have for down payment. You might tell me I want to put $10,000 down and then tell me in an application that you have $30,000 in the bank, and I might come back and say, I know you want to put 10 down, but if you put 15 down, here's how it helps you. Here's how it makes your situation that much better, and here's how you can save more money and recap that additional money. It gives us the ability to have options. Once they've discussed those options with you, that's when you should be gathering all your documentation. Anybody who's not verifying your W-2s, your tax returns, your pay stubs, your bank statements, they're doing you an ill service there, because those are where the problems come up. All of a sudden, you look on a pay stub and it says child support. Well, you didn't tell me about child support during your application. You should have, but now it's showing up as a deduction on your pay stub, and it's going to affect your ability to qualify.
Less income.
You might have
It helps out their baby mama, though.
Yeah, that's true. It helps out, or the daddies,
the
baby daddy, the baby daddy. Maybe the baby daddy's getting child support. You never know. But all these different things that come into play. Bank statements, huge problem. The banks verify everything that's in the bank statement. Part of the anti-money laundering laws require. Part of the Patriot Act requires this. Large deposits have to be sourced and seasoned. What that means is a large deposit that comes into your account, either it has to be seasoned 60 days. So if you made a deposit of $30,000 into your bank account 61 days ago, I don't care about it.
Even if it's mattress money, it doesn't matter?
If it's been 61 days, so somebody who's out there who has mattress money, as you just described, put it in the bank. But don't make an offer on a house for the next 61 days. You know, people do this. They say, well, I have $10,000 in cash. I'm going to put it in today and I'll just wait. Okay, great. And then 30 days later, they write a check for a deposit. Guess what? Now I have to verify and it's going to show up.
Extension could ruin the deal.
Yeah. So sourced means, where did this money come from? Telling me I had some money lying around is not a good reason unless we can document that. We can prove it. So an example of that would be, you have $10,000 in cash. You tell me, Dan, I don't believe in the banking system. When Joe Mollicone ruined the state of Rhode Island, I was hit by that. Great. You put all your money into a safety deposit box. You put all your money into your safe at your home, and now you're depositing it. Prove it. How do we prove that? We say, okay, this person for the last 10 years has been making $40,000. Based on his credit report, this is how much money he spends. This is a realistic amount of savings. Mm-hmm. He's been saving $500 a month for the last 10 years. That's going to give him about $60,000 in savings. We deposit that $60,000 into your bank account, and then we print out your bank statements, and it shows that you have $100,000 in the bank. You obviously don't have a distrust of banks. So you have to be able to prove these things. What you say has to be proven. Other little things, name variances, things that show up on your credit report that weren't yours, collections, judgments, all these little things are important. And you might be an 800 credit score on Karma, but you may have a judgment that shows up on your collection, on your credit report, that's not even yours. And the only way to find out these things is to go through the formal application, send in the documentations that your loan officer is asking for, and let them review it. And again, if you're not doing that, or if you're not willing to do that, you shouldn't be buying a home. Number two, if the person who's doing the loan for you isn't asking for that stuff, they shouldn't be writing your loan. This is the truth. You know, regardless of who you're working with, some people disagree with me and they say, this is ridiculous. I'm an 800 score. I make $100,000 a year. Why should I have to produce all this documentation? It's for your own protection. You would not walk into a doctor's office and say, doctor, what's wrong with me? Because he has no idea unless you let him listen to your heart, listen to your lungs, look in your eyes, look in your ears. This is what your loan officer should be doing for you. So if you're the patient that walks into the doctor's office and says, nope, I'm not going to take off my shirt. No, I'm not going to cough. I need to know what's wrong with me. You're probably going to die of something and not know what was coming. Same thing with your loan. If you're not willing to be examined, well, it's the truth, though. If you're not willing to be examined, and I think that we are seeing a great turn, and I'm really, really proud of the realtors that I work with. And you had mentioned this when the segment first started. You're not letting people in that don't have a pre-approval. I'm seeing some of the realtors that I work with going even further than that. They're verifying these pre-approvals. They are calling up and saying, hey, you got pre-approved from Citizens Bank. Do you mind if I call your loan officer? What's your loan officer's name? I don't know. It's just some random person at one of these banks. That should be a sign right there that you have a problem.
You have to do that.
But it's very important because you're affecting the lives of your seller. You're affecting the life of the seller's agent, the buyer's agent, maybe a seller on the other side, because the person who's going to sell your home, their home to you, and then you get 30 days into it and find out that there's a problem and that you can't qualify. It's a chain reaction that's going on. And the easiest way to fix that chain reaction is to get your examination at the very beginning, go through it, make sure it's valid. It's going to protect you. It's going to protect all parties involved, and you're going to find that you have a seamless, easy transaction.
There's a website out there, Dan, and they sell leads to agents. And anyways, we were looking at getting some leads from them. And when they told us that they called us for an interview and whatnot, and when they told us that you weren't going to pre-approve the buyers before you take them out to do showings, I said, this is crazy. I don't even want to do business with you.
Why would you ever do it? That's insane.
Yeah.
Again, here's another analogy for you. You work at a car lot and the guy says, I want to test drive a car. and the dealer says,
can't afford it.
No. The salesperson says, I need a copy of your license. And you say, I have a driver's license, but I'm not giving it to you. That's ridiculous that you would want a copy of it. It's not ridiculous. You need a copy of it so you can see, are they a valid driver before you take them out? Same difference in real estate. If you ever, as a realtor, brought somebody who was not qualified to buy my home and let them walk through my home and see all my personal property and sometimes be unattended in my home, I would be infuriated with you. I would probably be finding a new agent to sell my home if you let random strangers walk through my house.
Absolutely. That's why we strictly pre-approve everybody that's coming into our homes. And sometimes buyers walk, but they're probably not buyers. So anyways, this is the Roundtable Real Estate Simplified. Daniel Giroux, thank you so much.